Last month's non-farm payrolls showed strong job growth in the US, exceeding the market expectations. However, the rise in unemployment has kept the Fed on track for a rate cut by 25 basis points in the December FOMC meeting. At the same time, the Fed also signaled a slower pace for rate cuts in 2025. The big question now is, will this cautious stance continue this year? The upcoming NFP report on January 10 at 4:30 p.m. GMT3 could hold the answer. A surprise in the report, whether above or below expectations, could challenge the Fed's outlook and spark market volatility. In this video, we'll explore the December NFP prediction and uncover trading opportunities surrounding its release. Stick around until the end for the full breakdown. Before we get started, don't forget to hit the subscribe and notification buttons to stay updated with the latest trading insights. The November NFP exceeded market expectations with 227,000 jobs added. However, the unemployment rate edged up to 4.2%, which marked a 0.1% increase. On the other hand, wage growth also outpaced market forecast and rose 0.4% month-over-month and 4% year-over-year. Immediately after the data release, the US dollar index strengthened and climbed to the 106 level. In contrast, gold prices were weighed down by the strong dollar and fell below $2,630. However, crude oil continued its weekly downward trend, showing limited reaction to the NFP report. Meanwhile, US stock markets saw mixed reactions. The Nasdaq 100 and S&P 500 posted gains and signaled optimism, while the Dow Jones Index edged slightly lower. With the anticipated economic slowdown and corporate layoffs, the upcoming NFP report is expected to be affected. Job growth is expected to cool down, with only 160,000 new jobs added. However, the service sector's resilient growth may stabilize job numbers and keep the unemployment rate at 4.2%. Meanwhile, average hourly earnings are projected to increase by 0.3% month-over-month and 4% year-over-year. Now, how will the NFP data influence the financial market? Let's dive into the technical analysis of 4 key assets that could see high volatility around the NFP data release. Stick with us until the end for some exciting trading opportunities. First, let's look at the US dollar index. A stronger than expected NFP report could strengthen the US dollar, which signals economic strength and reduces the chances of Fed rate cuts. As a result, the dollar index could rally above 109. However, if the jobs data falls short of expectations, the dollar will weaken, and the index could plummet and test support levels around 107.37 or 107.06. Next, let's talk about one of the most actively traded pairs, GBPUSD. A strong job growth will boost the US dollar and pressure the pair to slide to potential lows around 1.2361 or 1.2324. Conversely, a softer than expected report could weaken the dollar and push GBPUSD higher to test resistance at 1.2688 or 1.2735. On to the next, gold. If the NFP surprises the market with stronger than expected data, gold could lose its shine and drop to around $2,599 or $2,582. However, a disappointing report could increase gold's appeal as a safe haven. Gold price could rise and test the resistance levels at $2,688 or $2,705. Finally, let's take a look at the US stock market. A stronger than expected NFP report could reignite investor confidence, lifting the S&P 500 to impressive levels around 6,029 or 6,060. On the other hand, a weak report might trigger sell-offs, dragging the index down to support zones at 5,893 or 5,861. The above recommendations are only for your reference and should not be considered trading advice. If you find this video helpful, let us know below and remember to like and share. Don't forget to click the subscribe and notification buttons to keep up with the market updates. See you next month.